Good afternoon.
Afternoon, Jack.
Afternoon, JC. You okay?
Very good.
Afternoon, Robin, Leanne,
Yeah.
Kevan. How are you?
Hi, Jack. Very well. Hope you're okay.
Good, thank you.
Yeah,
Hi,
very well,
everyone.
thank you. Looking forward to this afternoon session. Okay, Jonathan, speakers, are you all prepped and ready to start?
Yes.
I think we are, yes.
All good.
Yep. All good.
Amazing. Okay, right. I won't delay things any longer. I'm sure people will be joining throughout the meeting, but we'll kick things off. So, good afternoon, everyone. Welcome to Proper Talk. Today's session is going to be on insurance regulation for managing agents with the title Don't Get Caught Out. So I'm Jack, head of Flatguard at Bridge Insurance Brokers, as well as a co-founder of Proper Talk. Today's session marks our 8th Proper Talk event. Our roadshow to date has taken us to Manchester, Birmingham, London, including the Ricks Lecture Hall in Parliament Square, as well as the Insurance Hall at the heart of the City of London. And today we mark another milestone for Proper Talk, which is our first webinar. So I'm pleased to report that over 400 property professionals have registered for today's lunchtime webinar. So massive thank you for all the amazing support as always. In today's session, we welcome back some familiar faces to Proper Talk. We have with us Robin Gleeson, Bridge Insurance Brokers, and represents myself with Flatguard Insurance as well, part of the blocks of flats arm at Bridge Insurance Brokers. We've got Leanne Philp, head of Group Insurance at Anthem Management. Anthem are a nationwide managing agent. We've got Kevan Goff, who is representing Your Company Matters, and they are insurance regulation specialists. And finally, we've got Jonathan Channing, who is Proper Talk co-founder and JC Property Consultancy. Jonathan is going to be today's moderator. So, Jonathan, I'm going to hand it over to you.
Lovely. Thanks very much, Jack. Good afternoon, everyone. A warm welcome to our first Proper Talk webinar. It's great to see so many familiar faces and plenty of new ones too. Well, names rather than faces, I suppose. Over the next 40 minutes, we're going to cover 7 core areas of insurance regulation that are particularly relevant to managing agents, RMC directors and freeholders. This isn't designed to be an exhaustive deep dive. Think of it as a taster of the big issues, the pressure points, and the areas where people most often get caught out. We're fortunate to have a panel of experts who deal with these issues day in, day out. And after the session, we'll circulate their contact details so you can follow up directly if something resonates or raises questions for your own business or clients. Please do type your questions into the Q&A chat as we go. Jack will be keeping a close eye on those, and we'll aim to spend the last 20 minutes of this lunchtime session getting through as many audience questions as we can. Right, with that, let's get straight into our first topic. And it's a question for Kevan. Kevan, managing agents operate in an unregulated industry, yet insurance regulation feels strangely optional in practice. Why is that perception so dangerous now?
Well, it's very dangerous because since the FCA took over responsibility for regulation in 2005, any firm involved in distributing insurance products has had to be regulated. So you're breaking the law already by not being regulated if you're transacting insurance products. I think there were reasons why that was happening. I think sometimes managing agents didn't know. I think sometimes people further up the chain, brokers, were turning blind eyes and just placing business and ignoring the fact that the managing agents weren't regulated. And I think there was this can't apply to us. They can't mean us. This does not. We're property. This can't be us, can it? And I think some just took the easier commercial route and just got on with it. I think in recent years, in the last 2 or 3 years, I think that's become. It was always quite dangerous. I think is now much more dangerous. What the FCA has done, the Financial Conduct Authority has done, is introduced a principle called consumer duty. And what that means is those higher up the chain, the insurers and the insurance brokers, are required to have an understanding of all the activities throughout the chain to the end customer and the impact on those activities have on the end customer. So brokers are having to ask their introducers, what are you doing? How are you doing it? And what are you charging for it? And that means now it's impossible to turn a blind eye without opening the broker up and the managing agent up to quite heavy scrutiny.
Yeah. Personally, I've seen a huge change in the last 25 years, particularly more recently, in being in block management for that time. It used to be the Wild West and regulation was barely mentioned. Robin, does insurance regulation feel a lot less optional to you these days?
Yeah, it does, and I think that it certainly should do for most, if not all, insurance intermediaries. Yeah, rightly or wrongly, there was a certain aspect of turning a blind eye probably 5 years ago, and before that, but it certainly has tightened up in more recent years. The buzzwords that Cavan mentions of fair value and consumer duty play a part. There's also the legal ramifications of what happens if you get it wrong. But also, I think more than ever, we've got a moral obligation to make sure that everything is done correctly, everything is done compliantly. You're not only protecting yourself as brokers, you're protecting the managing agent and their leaseholders. So there are lots in the chain that you need to consider and look after. That being said, there is absolutely still leakage out there, and it does still need tackling.
And by leakage, you mean some brokers effectively are still turning a blind eye to a managing agent's lack of regulation?
Yeah, exactly that. I don't know if it's turning a blind eye. I don't know if it's arrogance or lack of control, but we are seeing examples where managing agents, unregulated managing agents, are still placing insurance and, even worse, getting a commission for those transactions.
Yeah, got it. Leanne, welcome. From a managing agent's perspective, what's changed in the last 12 to 24 months, say, that has made insurance regulation more of a board level issue rather than a technical one?
It's a good question, because I'd say for us at Anthem, insurance regulation has become board level because leaseholders now have far more power, visibility and rights. And this puts every decision that we make as managing agents under much closer scrutiny. Yeah. Here at Anthem, we've always treated leaseholders fairly, but the FCA's rules that came into effect on the 31st December 23 included formally recognising leaseholders as customers. So this has significantly increased the level of transparency that is now required. For us, we've always been able to justify our income because we have a dedicated in-house insurance team, and that fully manages our portfolio policy. But with the new environment, it means we've had to formalise and evidence all the work much more clearly. So we now provide a full disclosure pack at renewal. This would show things like premiums, how the policy was selected, all remunerations, and our own role in the process. This, of course, has created a lot more queries and a lot more engagement from leaseholders, which is a great thing for us, quite honestly. During our portfolio renewal, which we renewed on the 31st December just gone, the volume of questions and queries was vast. The more information that you provide, the more queries that will come in. And I don't see this as a bad thing at all. In fact, I would encourage it. So for us, it's really now insurance is no longer technical. It carries real compliance, governance, and of course, importantly, reputational risk as well.
Yeah, of course. Thank you. I think that level of insurance diligence was unheard of 10 years ago, and it's great you're taking it so seriously and setting a good example. Okay, on to our next core subject, the regulatory choices that managing agents have today. So Kevan, for managing agents watching who may be feeling overwhelmed by the regulatory landscape, could you sort of swiftly walk us through the realistic regulatory routes available, FCA authorization, appointed representative, and the DPB exemption?
Yes, Jonathan. The first one you mentioned is direct authorization. So that's where a firm has a direct relationship with the regulator, the Financial Conduct Authority. What that means is that direct relationship means that you have to prepare and submit several regulatory returns to the FCA, around about 10, and that's quite burdensome. The FCA charge you an annual amount, depending on what insurance commissions and or fees that you earn. And scrutiny can extend to them asking you to provide evidence of documentation and policies, procedures, operating procedures, things like financial crime policy, whistleblowing policy. So you better have all those in place. I think for larger firms who have their own internal compliance resource, that's doable. I think that's suitable for the larger firms. The other option for regulation with the FCA is to become an appointed representative of a principal firm. And the principal firm, if they're doing their job properly, should take a lot of that burden away. It's not a free hit. But if you haven't got suitable compliance resource, the principal firm will do that for you. And the deal they have with the FCA is saying, do not worry about this firm, this AR, this managing agent, because the principal firm has got things covered. And they're responsible for submitting all the regulatory returns and gather that information. And they should then provide, the principal firm should provide all the policies and procedures that you need and provide auditing processes to make sure you're on the side of the angels and transacting it in a compliant manner.
Yeah.
There's also an introducer appointed representative, but all they can do is effect introductions, and therefore the fees and commissions they earn is commensurate with that work. So it's a smaller amount. So it's only a reduced commission because you're not doing that work. And if you remember, I talked about consumer duty earlier, where people further up the chain are asking what work you're doing. What the people at the chain should be saying is, you're only introducing, we can only pay you a certain amount, and you can only be paid once for the introduction. Once you've effected that introduction, your work is done.
Yeah.
And then the other, the exemption is for RICS. So you're not authorised by the FCA, but you're authorised by RICS. And there's nothing wrong with that option at all. Their audits, I think, are tougher. Yeah, anecdotal evidence suggests that to me. The one difference is you're only restricted to affecting insurance policies for clients that you manage the property for. Whereas the FCA, you can transact other insurances for people that you don't currently manage.
Yeah.
So you could arrange insurance and then become the manager of the property. So it's a more flexible route, the FCA is than RICS.
Got it. Understood. You know, the gap there really for me is those that have not chosen any of those regulatory routes. I ran a report from the FCA website on over 900 England and Wales managing agents, and 59% have no regulation at all. And of course, of those 59% of the 900 managing agents in England and Wales, not all of them will be dealing with insurance matters, but I think the majority of them will be. 59 no regulation, 22% are an AR or introducer AR, as you've explained, and 11% are exempt via the the designated professional body scheme, which RICS runs. Only 8% are directly authorised, and I'm happy to circulate those figures to everyone afterwards.
Just on that,
yeah.
Jonathan, if
Yes,
you've got,
yes,
I think you said 58%, I think you said.
59%, yeah.
Beg your pardon, 59. If you've got access to the information, then it's a fair bet the regulator would have access to that information. And therefore, I accept your point that not all of them will be arranging insurance, but you did say that you think most of them might be or would be. And so there is a definite danger there.
Or dealing with some kind of insurance
Yes.
activity that may not be arranging insurance. We'll come to that. Robin, from a broker's perspective, where do managing agents most commonly misunderstand the line between regulated and unregulated insurance activity?
Yeah, I mean, look, I think we're going to have to tackle the subject. I mean, the majority of insurance-related activity, be it arranging insurance policies or dealing with insurance claims, is ultimately a regulated activity. It's very rare for a managing agent to do insurance-related activities that wouldn't, in some way, be regulated. So there is a misconception there. There is, a misconception of, I only pass on emails or something along those lines. But ultimately, if you are making decisions on behalf of your leasehold clients or persuading them or being involved in those decision-making activities, then it is regulated, and the same goes with claims, unfortunately.
Yeah. And Leanne, just finally in this section quickly, I said that only 8% of managing agents are fully authorised and regulated through the FCA. Your firm is in that category. Yeah. My impression, most managing agents avoid being so because it's time consuming, expensive and pretty onerous. Is it all three of those?
Yeah, I would say so, to be honest. I mean, to become fully authorised, it does take time, it costs money, and it does come with ongoing responsibility, which can have personal repercussions if something goes wrong. For those agents where insurance isn't their core function, it can, I guess, feel like a really big step. In my view, the bigger risk, however, is that many firms try to rely on exemptions instead of being fully authorised. And if they did misunderstand or overstep those exemptions, they can end up in a regulatory grey area without realising it. And that's where exposure comes, even unintentionally. So, yeah, no,
that makes sense and is borne out by the numbers. Right, let's get stuck into one of the elephants in the room. It's an elephant that's responsible in large part for the 59% of managing agents swerving insurance regulation, and that's the company secretarial route. So, Kevan, many managing agents do rely on being the company secretary, effectively becoming the client to arrange insurance without any FCA permissions. Is that a sustainable position, or is it a ticking time bomb?
Well, at the moment, it's a perfectly legal route that you can take. The issue for me is that it's a clear conflict of interest. You're wearing both the hat of the client and that of the firm that arranges insurance cover. So if the cover is not arranged correctly and a claim is declined, which hat are you wearing? And there you have a problem.
Yeah.
Now, we've said it's a conflict of interest. The regulator would expect all conflicts to be identified and mitigated. And wider than the regulator, any business should be identifying and mitigating conflicts. I think you said ticking time bomb. It's clear that this sector of insurance placing and managing agents more generally is under scrutiny, regulatory scrutiny. I think it'd be quite a surprise if the the regulator and the government were not aware of this conflict.
I'm sure they are. Yeah.
And I think it would be a free hit for them to close that loophole. At the moment, it's perfectly legal. I think it's, I don't think it's the correct thing to be doing. And I do think people should be starting to look at different routes and methods, bearing in mind, I think it is under particular scrutiny, this particular issue.
Yeah, understood. Leanne, so operationally, how realistic is it for a managing agent to genuinely act as company secretary for every client and to do it properly? And is it a PI risk?
Yeah, I mean, I have to say, being completely honest, prior to being involved in the Proper Talk panel, I hadn't come across this workaround before. I mean, I find this arrangement to be quite problematic. And I'd be concerned about any managing agents doing this. I mean, I guess as COSEC, their argument is that they're not advising the client, so the FCA rules don't apply. They're arranging insurance purely in their company secretary role rather than as a managing agent. If the managing agent is also the company secretary, they're no longer external. They're inside effectively the governance structure, which I totally agree creates a conflict of interest. And once that conflict exists, it's very hard to argue that you can rely on an FCA exemption or that you're acting independently for leaseholders. And at the end of the day, this is about protecting people and their properties. If insurance isn't arranged properly, then the consequences can be dire for leaseholders and RMCs. And of course, it's huge exposure to managing agents. And in addition, I would flag this as a PI risk. Yeah. Would a PI insurer accept a managing agent acting as COSEC and then arranging insurance? Because if anything went wrong, the agent would be directly exposed, and I think the conflict could be indefensible. I mean, my advice would be for those agents doing this is to ensure the client is fully aware of this arrangement and the broker, and in addition, to make sure you include this activity within your PI proposal form.
Yeah, makes perfect sense. And Robin, your company does deal with lots of managing agents that are company secretary for their clients, and that's how you can deal with them. So from your side of the fence, what concerns arise when a managing agent says, yeah, they're relying on the COSEC status or having the DPB exemption, to handle insurance matters?
Yeah, I mean, you're right. I think we are in the same boat as the majority, if not all other brokers, in that at the moment we are transacting business with managing agents who are company secretary for their managed developments. We need to be very careful in that regard to make sure that if we are transacting business for a particular managing agent who's relying on that route, we are making sure that every single site that we are asked to quote for, they are company sec on, because there are always a proportion of managed developments where they can't be company secretary on, which then creates another issue for them to figure out which ones they are, which ones they aren't. So again, it is problematic. We are guiding our current managing agents on the uncertainty of the future for that particular method, in terms of it's probably not watertight. There probably are going to be changes afoot. We've mentioned ticking time bomb a few times already on this call. I think another word is a loophole, and the FCA potentially looking at it as a loophole. Now, obviously, if the FCA are looking at it as a loophole, then there's only a matter of time before they close that loophole. So there are a lot of issues. I think the RICS and the DPB side of things is less of a concern for us. Whilst it's obviously not full FCA regulation, managing agents are at least regulated by a trade body who regularly audits them and ensures that they are, compliant according to their standards.
And just quickly, Robin, we need to go to the next section, but the FCA does have the jurisdiction to close off the COSEC route. Is that the case?
Who knows right now? You'd like to think so. However, the problem that we have currently is the FCA has no jurisdiction over non-FCA regulated companies.
Yeah.
So there needs to be involvement of, maybe the TPI, the government. There needs to be other organisations involved if they're going to truly close that loophole.
Yeah.
Okay. I think it's more of a government issue, Jonathan, than the regulators issue.
Got it. Yeah. Okay. One to look at closely. Robin, just going on to AR models, and many managing agents are surprised to learn that brokers no longer want to appoint new appointed representatives directly. Why is that the case?
Yeah, it used to be a method of securing business for the long term. If you signed a managing agent up to an AR agreement, then obviously you are guaranteed all of their business, because the AR agreement does specifically state in the majority that they will only deal with you, because ultimately you are the one that is regulating them. I think as times have changed, it has proven to be an incredibly arduous responsibility on the broker, because you have to audit them regularly. You are being very intrusive with not really just their insurance related activities, it's sort of all of their activities, because ultimately you are affording them your FCA regulation. In addition to those responsibilities, I think we used the phrase earlier, but it's a huge conflict of interests, in my opinion. You've got, on one hand, you're trying to regulate this company and make sure that they are doing everything the way that you expect them to do. On the other hand, you're asking them for more business. Now, there is obviously, if you're combining those two, going to be situations where you are potentially willing to cut corners just to secure more business, which shouldn't be the case.
So, Leanne, from an agent's point of view, why is flexibility, i.e. the ability to work with more than one broker, so important?
I guess from our point of view, it matters because not every block or every client has the same insurance needs, and having, I guess, the ability to work with more than one broker can give you access to different markets, different service levels, and of course pricing as well. At Anthem, we place our main portfolio policy through one broker, because for us it gives us consistency, scale, and governance. But I do also work with a wide range of other brokers. So we have a lot of standalone policies where Anthem isn't responsible for placing cover. So by doing this, I can see the value of having options and ultimately making sure the client gets the best outcome. I mean, above all else, I would always ensure that, you managing agents work with good brokers and establish that relationship. And the most important factors within this are that the broker really understands your business, how a managing agent setup works. It's not our money that pays for the premiums, it's service charge monies. We're working on behalf of our client, and also that they understand how you arrange insurance and whether you can advise or not. So I think, like Robin has said, get them to work with you and remember who the ultimate decision maker is. It's not us, it's our client.
Yeah, I guess the key is having the right number of brokers. I would say a relatively low number, but sufficient to ensure you've got choice and variety, horses for courses. I mean, two brokers with identical market access doesn't offer the customer as much as two brokers with a very different outlook, I suppose. But Kevan, your firm operates as an intermediary appointed representative, which allows managing agents to work compliantly while still accessing multiple brokers. Could you explain why that model has emerged and why managing agents are increasingly drawn to it?
Yeah, we as Robin said, we found that insurance brokers were assuming the role of principal company, and going back quite a while now, 17, 18 years, we had brokers who were less confident. One, there was a conflict of interest, as Robin said, but also that the breadth and depth of regulation meant that they were uncomfortable providing that compliance support. that breadth and depth has got broader and wider, and we now even have non-financial conduct to consider. So things like sexual harassment. So issues like that, the regulator's interested in. I think it's quite a difficult thing for a broker to tackle that sort of issue. We're a compliance company, we can tackle that. And it's the breadth of compliance support that now has to be built into the process. And only this week, one of our ARs opened a dodgy email and found it consequently written to a chunk of his email address book, forwarding the offending email. We can deal with that, you know, and have given him the guidance of what to do. So it's as compliance has got deeper and broader, I think it's been, people have been attracted to our model because we provide that compliance support as well as the insurance expertise, I hope, as well. And I think we've become a natural fit for that, and a lot of brokers have bought into it because the people they're dealing with, then the managing agents, have a safer footing. But also we don't insist that they deal with one broker. So if a relationship with the broker frays, they haven't got to apply for a new relationship with another principal. They can just move to another broker under our umbrella still. And also it means that you know, they can place perhaps the trustees indemnity D&O policy with one broker. They can place the property with, if that's what they want to do. So they have a lot of freedom, a lot of leeway. We still have to make sure that broker's fine, but the ones we deal with aren't, and we know enough of them. And I think we just provide a route. It's not pain free, but there's enough anaesthetic for people to be able to move freely.
Good. Thanks for that. Yeah, I think, you know, there'll be plenty on this webinar that will have never heard of such a service, having, you know, their traditional AR route sort of closed off by a reluctant broker, and then falling back on the company's secretarial route. Maybe, you know, there are other options. Just onto our fifth of 7 subjects. This one I've entitled Criminal Offences, Claims Handling and Skating on Thin Ice. So, Kevin, can I come back to you and just pose this to you? If a managing agent arranges insurance or handles claims without FCA authorization or DPB exemption, this isn't just best practice territory. It can be a criminal offence under the Financial Services and Markets Act 2000. So why aren't we seeing more enforcement given how widespread this is?
I don't think they've looked too closely. I think with the advent of Consumer Duty, though, I think now the focus will be on those brokers who have to analyse who's doing what down the chain. So I think the it means that the brokers themselves are having to tidy up the mess a little. If they don't, that's where I think the enforcement will come. They don't have any authority, particularly over the managing agents. They can refer them to the law, but I think what they will more likely to do is to attack the brokers who have allowed this to happen, and there's where I think the fines will be. So it's incumbent on the brokers to ensure that anybody down their chain is complying with regulations.
Yeah, that's crystal clear. Robin, a common defence is, you know, we don't advise, we just administer. And as you touched on before, they may say, look, we only deal with claims. Could you just make it clear for us, is claims handling a regulated activity?
Yes. Quite simply, it is.
Okay, so that's crystal clear, because it's not often crystal clear from other sources in the industry.
Yeah, I mean, I think the differentiator is, in theory, you can postbox without regulation. However, as we know, it's incredibly difficult to post box as a managing agent. You know, in theory, you're still going out there, you're still getting quotes for repairs, you're still authorising the repairs after the insurer's authorised you, you're still taking in the claims payments. You know, it's incredibly difficult to just do that. If you are handling an insurance claim in full, then it is ultimately a regulated activity.
Yeah, understood. And some agents hearing that will go, I'm going to give up dealing with insurance altogether. And Leanne, for you, like, you know, is stepping away from insurance altogether actually risk-free for managing agents?
I mean, quite simply, no, it's not risk-free, because we still have to manage the building. The building still needs insurance, and if that insurance isn't fit for purpose, the operational fallout still lands with us as managing agent, and the consequences can be huge. So yeah, it's
Yeah, I agree. A managing agent leaving their client to their own devices, I think, is irresponsible. I know that an RMC or an RTM can't procure their building insurance through moneysupermarket.com, but they can still make grave errors, particularly with onerous policy wordings, which will be the subject of a future Proper Talk webinar, no doubt. And just Robin, on the leakage point you made earlier, where some brokers are still turning a blind eye to a managing agent's lack of regulation, is the FCA showing signs right now, and have been over the last year or so, of clamping down on the brokers themselves? Is that actually happening?
There's been talk of it, certainly. In reality and in practice, we're yet to see it. However, I don't think you can rely on that anymore. I think we're all of the understanding it is coming if it's not already there.
Yeah, good. Okay, makes sense. Thank you. Our penultimate subject, another elephant in the room: commissions, fair value, and what comes next. So, to Kevan, with the leasehold and freehold reform act likely to end commission sharing, what does fair value actually mean in practice for managing agents?
What fair value is the necessity to demonstrate that there's a reasonable relationship between the amount paid by a customer for the product or service. Any commissions and fees should be commensurate with the work that's been undertaken, and there's the fair value. So it's therefore important that managing agents and everybody in the chain understands every moving part of the insurance placing process, and having to analyse whether it's to the benefit or the detriment to the customer. And those earnings, let's say, have to be commensurate for the time, effort and expertise expended. So if you're doing more work for a client, then you're entitled to earn more in commission and or fees. But you have to be able to demonstrate that. And what good brokers should be doing is asking property managers to demonstrate that. That they are providing fair value.
So let me just come to Robin, because we're pushed for time. If commissions do disappear, Robin, what should a healthy and transparent agent broker relationship look like?
Yeah, I mean, well, you've hit the nail on the head, Jonathan, with the word transparent. It still needs to be transparent. You know, you still need to, as a broker, be fully transparent on your own earnings. I think that it becomes far less about the back scratching both ways that has been, you know, the cornerstone of that relationship for years and years and years, and becomes more based on service, competitiveness of premiums, cover, and probably what you'll find is if/when commissions do get removed, managing agents will have to justify fair value a little bit more, and probably shop around a little bit more, and rely less on their partner broker that they've got at the moment.
No, absolutely. If I was to put you on the spot, will commission banning come into force in 2026?
I wouldn't be surprised if it gets rolled out in 2026, but I don't think it will be implemented this year. Okay. I think there's too much to be done in 1 year to be able to achieve that.
Okay, right, on to our final subject before the Q&A. Hopefully everyone's typing furiously into the Q&A box. This last subject is training competence and what IDD compliance really looks like now. So the IDD, the Insurance Distribution Directive, is the framework that governs how insurance is arranged, advised on, and it came into force on the 1st of October 2018. It's about consumer protection and lots of other things. So, but bottom line is, if you're involved in insurance, you need to be properly trained, competent for your role, and able to evidence that if challenged. So, Kevan, the FCA has moved away from a prescriptive number of CPD hours. Now, that until very recently used to be 15 hours a year, focusing instead on whether individuals involved in insurance activities are genuinely competent for their role. In practical terms, what does IDD compliance mean today for managing agents involved in insurance?
Well, it hasn't really changed because you have to still evidence competency for the role. I think removing the 15 hours requirement is a good thing because it now means that good firms can tailor training specifically to the role rather than we must tick off 15 hours. And it also means that people are thinking a little bit more broad now. And perhaps an example might be that if somebody's dealt with a difficult case, they can now tick that off as training rather than doing a module for an hour on something they did last year. Yeah. So I think what it's allowed firms to do is actually tailor the training requirement to the role in a much more structured and effective way than just tick boxing.
Yeah, understood. And Leanne, from a managing agent's perspective, how realistic is it for property managers for whom insurance is only one part of a much wider role? How realistic is it for them to maintain sufficient insurance knowledge and competence?
I mean, personally, I don't think it's realistic to expect property managers to include insurance within their already very overstretched roles. There's so many new regulations now across building safety and property management generally that dedicating that level of time, it just isn't practical. And the risk is that people end up dealing with insurance without the depth of knowledge they need. They may well not get the cover right for the client. They also may not include all material facts or properly disclose information. Insurance policies are complex and very wordy, so it's really easy to miss things. And if material information isn't disclosed, then insurers will impose terms, restrict claims, or even can void cover. I think it's easy for insurance to become everyone's job and no one's expertise, and that's really where problems come about.
I think that's right. Ideally, managing agents should have a dedicated person or team for insurance matters, and leaving the property manager to get on with the rest of the conveyor belt of problems. But there remains a strong argument for property managers to be trained sufficiently on insurance matters because they're the clients or a primary point of contact. But I think we're going to have to wrap up there and go straight to our Q&A, if that's okay. Jack, could we hand over to you?
Yeah, so there's been a couple of questions. I think we maybe need some clarity on whether or not regulation is only applicable if you're receiving commission. There's a bit of a grey area on the questions between, well, we don't receive a commission. Does regulation still apply to us? I'll give you an example. Is there an issue if we assist with insurance issues under the COSEC status if we are not charging commissions, and thus the conflict of interest is limited as we are not benefiting from providing this assistance? I don't know if that's one for you, Kevan.
Yeah, the payment of commissions is irrelevant. It's the activity that's regulated. So I do have a couple of ARs that don't earn anything at all. But they are still conducting regulated activity, and they do it as a service. The company secretary thing, it isn't about the commissions. It's about who you're acting for. Are you the client or are you the agent? And therefore, if the insurance is incorrectly placed or placed with gaps in it, are you then the client or are you then the agent? Who is suing who? So I think there's two different questions there. So I don't, but if you're tying it up, the commission is irrelevant to the activity of a company secretary and regulation.
Thank you, Kevin.
Yeah, we've got a question around dealing with claims. So if a managing agent assists in a claim by obtaining quotes and submitting to the broker, is that okay? Or would that need regulation? Funds for the claim are normally paid into the client account that the managing agent holds. Surely it's better for the managing agent to assist this way rather than leaseholders claiming for issues that wouldn't warrant a claim and boosts premiums with the number of silly claims. I mean, it's a very realistic situation, you know, managing agents getting involved in claims because actually leaseholders will benefit overall, but I guess there is lines of regulation that still need to be addressed.
Yeah, I mean, I think on that, it is very difficult for managing agents because ultimately their management agreement with those end clients will stipulate that they have to get involved in insurance claims. You know, if there's an escape of water that affects communal areas or something like that, they will naturally, as part of their management agreement, have to be involved. And like I sort of said in the previous question, if they're not just merely post-boxing that particular claim and getting involved, taking claims payments, arranging for quotations to be done, then yes, unfortunately, it is a regulated activity. So they do just need to be careful, I would guide.
On the back of that question, then, we've got another one that ties in very nicely. So can managing agents charge additional fees for claims handling? And add it to the cost of each claim, particularly if the agent do not accept commission from the brokers. As we know, the involvement in claims takes most of the time, which is often much more time expenditure than compared to with potential commissions received. I think it's a good question. And, you know, first thing is obviously that regulation needs to be in there. If you are going to charge a fee for a service, it's very important that you're regulated to undertake that service in the first place.
Yeah, I agree. And we have a claims handling fee, and I think as long as you disclose your fee to your clients, it's within your managing agent agreement, you know, what fees you are charging, as well as being regulated, then it shouldn't be an issue.
And are you able, Leanne, to add those claims fees to the cost of the claim rather than charging it to the service charge or to an individual leaseholder?
So in my experience, the insurer won't pay for managing agents' fees, and this is a cost charged to the service charges.
Right, because some managing agents do tell me relatively regularly that they do charge a fee and they add it to the claim, and their broker helps them put it through, you know, the claim. But, you know, that was a surprise to me too. But it seems to happen. And Jack and Robin, is that what you see from time to time?
Yeah, it depends on the policy. Some policies actually have it written into them.
Yeah, and I think it's also dependent on the size and the type of claim and what particular thing that they are doing. If they are able to demonstrate that they're going above and beyond their normal management duties, then I do think they can charge for their time in doing so.
Thank you.
Yeah. I've got a question that's just come in, actually. A nice, simple one. Is an RMC director able to arrange the insurance for a broker, even if no commission or claims involvement? The answer to that is absolutely yes. You know, as an RMC director, you are the policyholder, and you can instruct a broker to act on your behalf. I'm just going through here. Let's have a look. We've got one here. We are regulated under the FCA as authorized representatives of a broker. We do obtain quotations, but have received complaints about fair value, which we respond to. Does fair value apply to commercial properties?
Yes.
There we go. Nice and simple.
Yeah.
Let's have a quick look. We've got a question here asking if the webinar is being recorded so they can share it to their staff. The answer to that is yes. Anybody that's signed up should get a email once the webinar video has been published. So keep an eye out for that. All managing agents' commissions are disclosed both in the managing agent, in the management agreement, and within the insurance documentation small print. If a client becomes unhappy about these commissions, can they request repayment of all commissions received over previous years? Let's be honest, most clients do not read the small print.
Well, I think if you're declaring the commissions, and the only way you could get commissions back is if the commissions weren't fair in the first place. Then I think if you could demonstrate that they weren't earned fairly, then there is an avenue. We have come across examples where commissions have been incorrectly disclosed, and then that can open an avenue if they've sort of withheld the full amount. But you know, that's almost fraud, isn't it? But if they've been declared and fairly earned, it's hard. I don't see what the justification is for applying to get them refunded to you.
Yeah, I think the landscape that we currently work within, the insurance industry has done a lot to ensure that managing agents' commissions are, if not fair, certainly a lot fairer than they used to be. You know, there are gatekeepers involved that mean the majority of situations managing agents cannot get, you know, high levels of commission anymore. So I can only imagine that question is more around the past rather than the present.
Quick one. Do you need to be regulated to handle claims if you are company secretary?
No, you're still effectively the client as company secretary, so you can handle the claims as well.
Yeah, great. And I've got a good question here that's come in. If the agent is considered to be arranging insurance and handling claims, what exactly is the broker doing in that scenario? i.e., if you have a regulated broker, adding a regulated agent to the chain doesn't really change anything. You still take the client's instructions at that stage and refer technical questions to the broker. Similar to other services and trades, at what point is the agent considered to be carrying out instead of the broker? So I guess that is a question to Kavan about sort of, you know, yes, you've got that broker that's regulated. Why does the managing agent need to be regulated?
Well, it's the managing agent that's collecting the data to present to the insurance market. So in old money, they're the ones filling in the proposal form. The broker isn't talking to the client. So therefore, the managing agent is providing a service, a very important part of that service in that chain. And that's certainly regulated. They're the ones collating that information. Without them, it can't happen.
It's a bit like another intermediary position, isn't it?
It's exactly
so the broker needs to be an intermediary regulated to transact between the insurer and the policyholder. And if there is another stepping stone in the middle of that, which is a managing agent, every intermediary in that middle section between the policyholder and the insurer needs to be regulated.
Absolutely.
Yeah. We've had a couple of questions coming in around what is fair commission in 2026. I know it's changed a lot over the last 5 years. Robin, what do we consider fair now? And I guess it all ties in with fair value in most part.
Exactly that. You know, all brokers carry out fair value assessments for their managing agent clients to ensure that they are doing the work that is commensurate to the commission that is being paid. So you've got that as a safeguarding tool. I think the most important thing, though, is the insurance industry, like I touched on before, has changed its stance on residential buildings, and the industry standard There are obviously going to be examples where this isn't the case, but the industry standard is that insurers will pay no more than 30% commission of the premium to the insurance broker. And again, the industry standard is that there will be a 50-50 split between the broker and the managing agent, as long as the managing agent is either regulated or able to earn that commission. There'll be a 50-50 split. Again, there are examples where it is different, but that is the industry standard.
Yeah, it ultimately comes down to fair value. So it may feel reasonable to split a 30% commission 50-50, but is the managing agent earning that 15%, or not? Yeah,
exactly. And conversely, if the managing agent that you are transacting with does not earn a commission, then as a broker, you cannot justify that you take that full 30%. So again, it is working out those, fair value methods, what you are doing in that chain of command for your earnings.
Mm-hmm. Yeah. We've got a question here. Do the brokers not have any obligation to check whether a managing agent is authorized, regulated before placing cover on their instruction? Well, I can answer that one. Yeah, we absolutely have an obligation. All of my team will know exactly how to check the regulation status of a managing agent or the policyholder before placing either new business instruction or renewal instruction. And it's something that we're constantly trying to educate managing agents on, and we deal with managing agents that we get it all the time. Why are you asking for this? Our current broker has never asked us this before. They're regulated, and therefore we don't need to be. Or we get the classic, we are updated on Companies House, and I check Companies House and the correspondence address has been updated, but not the company secretary status. So we are constantly educating managing agents and trying to assist where we can. But we check every one of ours because it's the world we live in now. This is a very highly regulated space.
And it's dead easy to check. Companies House is very easy to check. The FCA register is very easy to check. So there's no excuses for it now. Yeah.
And what I will add to that, Jack, is we have in the past even walked away from clients who have not been able or willing to become regulated. And in my opinion, that is the way that all insurance brokers should work nowadays.
Mm-hmm. Yeah. Somebody's just asked, what if the directors or the clients are included? They're CC'd into all the emails.
No, I would say no. I would say it's fine to CC in the managing agent if they're not regulated for information purposes, but you still need to be writing to and receiving instructions from the directors.
Jack, I've got a question here via WhatsApp because the RTM director couldn't ask it on the chat. He says, in my experience as an RTM board member is that most board members are not well versed on insurance, commissions and claims. They are heavily reliant on the managing agent. We the RTM he's referring to, painfully suffered on commissions but managed to claw back some. However, the Ombudsman was completely unhelpful and ruled against us. How can directors get more assistance on how to review insurances, policies, claims, commissions, etc.? This is where the managing agent has essentially failed them. And then the Ombudsman took a year, I'm familiar with this case, took a year to decide that the broker and the managing agent hadn't really done anything wrong. And the RTM is feeling completely helpless. stunned silence.
Who are you asking? I mean, the issue there is, I suppose, when I think I do know the case. The Ombudsman can get things wrong, and there is an appeals process. So you can appeal those sorts of things. On that particular case, I'm not sure the Ombudsman got that one right, if I'm really honest. But the Ombudsman is the correct route. That is your ultimate arbiter.
Yeah, the RTM director also touched upon the fact that that the managing agent didn't do the right thing, and I think part of that was a lack of competence, training, etc. If you've got a managing agent that is regulated, that has done the required ongoing training, that is getting the right advice, they're unlikely to make the mistakes in the first place. I think that's the key point.
Yeah, I think that's true.
Yeah, and there was an appeal, and the appeal was still, overruled. Yeah, which is a shame.
Yeah, great. All right. Well, we are now an hour in. Unfortunately, I've not managed to get through all the questions. There are some questions here that I actually think you would benefit from taking them offline. Some of them are quite technical when it comes to claims or PI insurance. So we'll take those offline for you. Thank you. I mean, an amazing turnout. We had at one point over 300 people on the webinar today. So massive thank you. Find us on LinkedIn. You can find more information of Proper Talk at proper-talk.co.uk. Again, we're also on LinkedIn there as well. So please do follow us. Stay informed about our future events. It would be great if this is your first time on a Proper Talk session to come and see us in person. I think everybody who's attended would agree that they are very open debates, and we really tackle some very important subjects in property and leasehold. So please do join us at one of those. And that's it. Thank you from myself and on behalf of all the speakers.
Lovely. Jack, thank you very much. Thank you
Jack.
to all the speakers.
Thanks very much.
Yeah.
Thanks to all the attendees. Cheers.
Cheers.
Have a good day, everyone.
Have a good afternoon. I thought it went okay.